Traders War Room, we locked and loaded. Stop.
What's up, team? Chuck with Traders War Room, getting a Monday Madness video ready, watching a little bit of football, relaxing. But I wanted to give a little pro perspective. I like to drop some knowledge bomb sometime, and one of the questions I'm getting a lot here recently from direct messages is, yo, Chuck, I'm losing a lot of money right now, and I'm scared to invest. What should I do? Tough question, okay? Real tough question. That's a loaded question, actually. But it's a real tough question because I can't really tell you what to do. You kind of have to make that decision on your own. But what I can tell you is that this market's difficult, okay? We've broken through all sorts of support levels to the bottom where we normally would see jumps and bumps from, but we're not seeing those jumps and bumps. We're just seeing breaking to continuation to the downside. Or we see levels that we're seeing just weird stuff happen, like, you know, earnings are terrible and we see the stock surge. You know what I mean? So it's really hard to navigate these choppy waters. But what I will tell you, and I'll give you this as perspective, pro perspective, right, is that take this time right now to really hone your craft, okay? And make a decision whether you're in this for the short term or the long term. This is the type of markets that are going to weed out the casual investors. And what I mean by casual investors is they got in when the market was trending, right? They followed some influencers, some YouTube, whatever, you know, they made some money, but they really didn't dedicate to the craft and they don't really know what they're doing, okay? So when analyst pushes some sort of alert or says, buy this now, they just go off at it blindly. They don't look at the chart. They don't know the lines. They don't know the levels. They don't know how to read candlesticks. So you got to get into the books, man. You got to get into the studies. You got to start honing your craft. So take this time. If you're scared, right, and you don't want to quite invest so much right now, then get into the books, okay, until you feel more confident or until we get a trending market that goes into your way. You know, most chances are you're a bull at heart and you don't know how to play the short game, and that's fine. Wait till we got the trending market to the upside and start learning the craft right now and honing your strategy, right? All true investors, all we're doing constantly is just refining strategies to meet the ever-evolving market conditions. And that's all that separates the experienced traders from the newer traders, that we have the experience to refine and dial into the current market conditions. So what I tell you is if you got questions or something, man, don't be afraid to hit people up that you trust, man. You can drop me direct messages here on YouTube, join one of my premium platforms, and you can talk to me directly, you know, either on instant message platform or Discord. You know, we got the communities on social media. Hit us up, okay? Traders War Room's here to help, and we want to see everyone successful. Now, without further ado, let's go ahead and get into the Monday Madness, and if you're ready, follow me, and let's go to war together. Let's get it, baby, right now.
Traders War Room, we locked and loaded. Stop, some on it.
Hey, you know I'm on that though, man.
Y'all, come join it. In the Traders War Room.
So here's how your markets close. Now, what I want you to notice with the market trend, all right, we were on a slow decline, and then we kind of plateaued in the lunchtime slump, but then we dumped again in towards the later part of the market. But at the close, we started peaking up a little bit. So this could be a sign of trying to continuation to the upside, okay? So tomorrow could potentially be a relief day that we're looking for in the marketplace, but obviously we'll have to see how we open at the bell and what happens in pre-market. But high hopes on potentially an up day so that we can escape some of these calls that we got and we can look for some new positions. Here's the futures, and basically nothing surprised here. The futures have been red for a while now, and we keep getting mixed results at the bell. So again, we're not putting much credit into the futures in after hours. We'll look more for what the futures look like tomorrow when we start to get to the opening bell. Here's your sector performance, and I want you guys to start paying attention to the healthcare industry, okay? The healthcare industry has a lot of stuff going on with it, all right? There was tons of data coming in from the COVID-19, Operation Warp Speed, and I want you guys to remember that all of the failed results that came from that mRNA testing and, the pathogen testing and the gene testing and all that stuff, that data hasn't gone anywhere, okay? That data is being spun and reutilized and looked into new research and development and stuff like that. There's a lot of bullish sentiment on the horizon, specifically dealing with rare diseases, diabetes, and cancer, okay? You need to start paying attention to the healthcare industry. And like I told you about 6 months ago, this is the sector that I think is in the next idea for a boom sector, okay? Because technology is now meeting up to a level that can be utilized for these different industries. Here's the flow, and actually we got a little bit more bullish sentiment than we do bearish sentiment. So again, this kind of falls into what we just talked about earlier with the market trying to recover a little bit with a little bit of a curve going into the close. We're looking like potentially, don't get our hopes up too much, but potentially we could have a relief day. Dark pool, no surprise right here. SPY, of course, king in this particular sector. You got the Q and we got the Apple and the Microsoft. So we're definitely paying attention to those tickers. Here's your most active stocks with the TQQQ leading the way. Tesla, right behind it. And we got some penny stocks kind of picking up some of the steam here. I want you guys to start paying attention to some of these penny stocks that I'm pushing out, okay? This is a sector that likes to move and it likes to shake very quickly. Also, top gainers, looking at, again, some of these penny stocks, these top gainers, okay? One is why we're going to start paying attention to this sector a little bit while we're waiting for some of our blue chips to turn. And your top losers, of course, you got COSM. That's because that thing just absolutely, went parabolic the other day. So, of course, it was due to cool down a little bit. And you got some other penny stocks that struggled a little bit as well. Here's your top 15 trending stock tickers. And guys, we're paying attention here. Lucid, we're going to pay attention to that lightly. That thing likes to move. If we see some momentum, yeah, we'll go ahead and hop in on that one. But the ones that we're really paying attention to, Amazon, Disney, Nike, and XLY. Those are the ones that are really on my list because those are the ones that definitely could have some decent moving and shaking, and their underlying asset could move significantly, giving us opportunity to make some money off of volatility. Top news story, Asian markets mostly weaker as investors question China reopening. So Asian share markets slide, and they were trading mostly in negative territory on Tuesday as the investors anticipate a somewhat rocky road for China's unwinding of COVID restrictions and the prospect that U.S. interest rates will rise higher than expected in 2023. So we're definitely paying attention to that. Chinese stocks have already been kind of volatile and risky to get into. So definitely we're extremely risk when we get into these ones. But if we start to see some trend, and you guys know the names, Neo, Baba, JD, some of the other ones, if we start to see the trends and we start to see the turn, we don't need to be afraid to hop on the trend wagon so we can make some quick money. Crypto is still in the news, so special report, Binance's books are a black box filing show as crypto giant tries to rally to confidence. So the world's biggest crypto exchange, Binance, is battling to shore up confidence after a surge in customer withdrawals and a steep drop in the valuation of its digital token. Now, I'm going to go off script here a little bit, and normally I don't talk, assumptions and stuff like this, but I listened to this guy talk the other day on CNBC, and this dude just wasn't answering questions the way I would think that people would be wanting to answer questions in the wake of the FTX fiasco and to give confidence for Binance. Guy was kind of being secretive, and just to put it plain and simple, I got a shady vibe for this dude. So I've already put this out there. I think this is the next one to go. I think these guys are making money and they're doing a lot of shady stuff, and they're, finding loopholes to hide it and stuff like that. FTX was just the first one to get caught because he was dumb. This guy is a little bit smarter than that dude, but eventually I think this is the next one to come down, and then we're going to start seeing that crypto, winter happen, and we'll see the crypto even fall or further down in the rabbit hole. And I'm shorting this, by the way, this coin or token, whatever it is, I'm shorting this because I still think this has a way to go down. And finally, we got some Musk news. So Musk poll results, Elon should step down as Twitter CEO. So Twitter used a poll, and voters decisively said in the poll that Musk needs to step down as CEO of the social media platform. A backlash against the billionaire less than 2 months after he took over in what has been a chaotic and controversial reign. So Musk said on Sunday that he would abide by the results of the poll, but he did not give details on when he would step down if results said he should. He had said that there is no successor yet. Here's your most volatile stocks, and I want you guys to pay attention to some of these. A lot of these we're seeing in the volatility. We're seeing some expensive stocks that are being volatile. So we're definitely paying attention to some of these. I want you guys to focus on a few of these names. MDGL, that one right there is one of those healthcare industries that we were talking about earlier. And that thing is absolutely has a great story associated with it. Now, I could definitely see it cool down, especially after the news wears off. But this thing is dealing with the cancer and research development. And that thing is big money right now. We were just talking about that earlier. Another one I want you to pay attention to is Now. All right. That one is definitely something that is on people's radar as it has been beat up, absolutely destroyed. And some people think it's still overvalued, but it is very popular. And when it turns, it can turn very quickly and violently. Great opportunity to make some money. And another one I want you to pay attention to is mRNA, right? Again, we just talked about the healthcare industry with all of that COVID research data and the mRNA data and all of those things. These are stocks you need to pay attention to for the future. Now, here's your relative volatility. I want you to focus on a couple of stocks here. BTB, we're paying attention to that as well. We're also paying attention to NVAX, the NVAX, all right? And we're paying attention to Big DWAC and AKRO, all right? Those are some that I'm paying attention to in respects to the relative volatility. So I know some of you are asking it, so what's the difference between relative volatility and just regular volatility? Well, let's go into that a little bit before we get into the stocks and charts that I like moving forward. When we're first talking about volatility in stocks, we need to understand that volatility is the rate at which the price of a stock increases or decreases over a particular period of time. Higher stocks price volatility often means higher risk and helps an investor to estimate the fluctuations that may happen in the future. A relative volatility. We are talking about an indicator that measures the standard deviation of price change within a defined range of look-back periods to determine market direction, right? So an indicator that is utilized will have a value that's normalized as a percentage between 0 and 100. The key word that I want you to take away from this is standard deviation, which is the mathematical concept that measures how spread numbers are. In other words, it measures the amount of variation or dispersion in a given set of numbers. And what I'll do for you guys is I'll do a tech video on either Saturday or Sunday, and I'll break this down to the fine tuning so you guys truly get an understanding of the difference between volatility, relative volatility, and how to utilize it so that you can make money. And finally, before we kick off on the charts that I like, here's some of your unusual volume. And again, you're going to see a lot of penny stocks on here. And I told you guys we need to start watching the penny stock because these will turn very quickly. And there's great opportunity to catch momentum type trades on these cheaper penny stocks. SLNO is a great example of one that was a decent trade if you caught the movement. Look, the change in the price went like almost $1, right? And it's sitting at 185. Definitely a great momentum trade, especially getting in low and riding this thing to the sunset. All right, so let's get in some charts and stocks that I'm digging either near term or long term, or just looking for maybe some rejection plays either off of support and resistance. So let's break down SPY first. I got my triggers right out there. You notice my top trigger line is 385.56. My bottom trigger line is 378.19. And I got my orange mid trigger line, which is 382.29. Okay, now we're not holding those specific to a T, but those are basically what I'm looking at. So any type of long swing position that I'm looking for, I want to have a close above 385.50 so that I get the confidence that we've at least turned, temporarily for a bullish sentiment, and that we can consider going multi-day on a swing on SPY. Now, on the opposite side, if we start closing below that 378.19, 378.25, somewhere in that range, we can look at, we're probably breaking again to the downside and looking for another retest of lower support levels. And so we can probably swing for a couple days, puts going at the money, in the money as much as we can spare. Now, the orange line, that is more of a day trading or short swing type of overnight trade. Okay, if we start to close above or looking at going towards that level, and as long as we're staying above our moving averages, we're trading off of a 3-minute, 5-minute, maybe a 15-minute chart, we're looking good for those. We could go at the money, in the money, and look for some bullish call sentiments off of a rejection or reversal short term. Next, let's look at Amazon. So Amazon is lower at 85.11 than it has been for a long time. Okay, so we broke through this previous support level that we had established around the $86, $87 range, and we broke to the downside. Now, I'm looking for a little bit of rejection, a little bit of a bounce from this area to go retest those 86, 87s, and potentially some follow through pushing back up to $89 to $90. That's what I'm anticipating. So I'm definitely looking at calls above 86.38, 86.50 to be safe, with follow through pushing towards that 89.05. Now, if we get a definite close above, $89, $90, that could give us an idea for a near-term push towards retesting some of those previous higher levels at, the 95 area, if we get enough volume and enough sentiment pushing in there. However, if we fail at these levels and we go up to, say, 86 and 87, we reject and we come down, then the likelihood of us going below this 84.50 is high probability. And so at that point, we'd have to really pay attention to those levels and play off the rejection from resistance and play to the downside. Disney is another stock that I'm watching for rejection from here at the bottom. We've been down at this level before, 85.17, and we bounced violently up and pushed above $100 relatively quick. So I'm hoping for another bounce from these levels, go retesting those 87, 88 areas with some follow through into the 90s. However, so far the looking out at this Avatar box office, it didn't hit so well as people were thinking. But when you go back historically and you look at it, they're banking pretty hard on this. But lucky for Disney, the movie theater industry is not only their primary stream of revenue coming in, right? So there's some other things that are going on with this, and hopefully the CEO has got some things up his sleeve where he's looking to change kind of the atmosphere and get some bullish sentiment. So I am looking for the rejection here at the bottom and looking for the bullish push towards the orange line, and then hopefully with some follow through the blue line to the upside. So I'll be looking for calls. Now, anything of a failure, and obviously we can continue to go to the downside because we've already hit it before. Likelihood of us going down and hitting the 85s, maybe even 84 is definitely plausible. But I'm thinking we get the bounce from rejection down here at the support level, and we can see the push to the upside. And finally, let's look at Nike. So Nike, I like the area where we're at here for push going into earnings, okay? I think that they're going to do fairly well on earnings, and I'm probably going to keep some of my contracts that I have through earnings because I pushed my calls out into January, but I do like the area where we're at now. We pushed down to the 102. We rejected pretty violently off of that bottom level, and I do like the area where we're at, this 103.64, pushing towards 104. I think we hit that, and we get some steam underneath us, and we're able to push going past 105.31. Now, I'm not expecting fireworks, especially with the bearish sentiment that we have going on, pushing us all the way to 110. That would be fantastic. But I did go long on calls and pushed out to January because I do think this is going to make us some money near term. And so I'll be looking to secure any type of green pushing through earnings and on some bullish sentiment going to retest the 105s and the 107 potentially area. So let's look at a couple penny stocks that have been trending on high volume. SLNO. So I put some triggers out here. I like these areas for potential continuation on the trend. If we start pushing again and we start hitting above, the 160, 170 area, I'll start to think about long position, and that'd be a good push going for continuation to the upside, maybe to retest that $2.42 area, maybe even further. However, we start to retrack as penny stocks tend to do after they push on huge volume, and we start to go back down towards the 120 area, 115 area. We're looking for probably some continuation to the downside, and this could probably hit $1 again very soon. So we'll definitely keep an eye on this one, and this is relatively cheap, so we can kind of be a little more aggressive with this without pulling all the money out of the bank, because this wouldn't flatten out all the way to zero, because it's still just a penny stock. So the likelihood of this going down to $1 and then seeing some volume push from the bottom is high probability. Also, we could see the spike pushing this towards $2 range as well. So look for the volume, look for the momentum, and play the trend. And let's look at VKTX, so Viking Therapeutics, right? I do like this for a push above 725, especially if we start really peaking on that area hard. I like this for a push to the upside. We could easily get some volume and push us above $8, and that's a pretty decent come up, especially for a relatively cheap stock, 75 cents per share. You're going with 100 shares, maybe 500 shares, and you'll be making yourself some pretty decent amount of money. Now, if we start backtracking a little bit, we can utilize the $6 range as a stop loss, especially if we're going shares long, or we can look at it as a potential trigger if we want to go short on the stock. Probably if we start to close below there, the likelihood of us going to knock on the door of $5 is high probability, and so we'll probably want to think about the short game at that point. All right, team, that's all I got for you today. As always, quit wasting that money that's not making money and join the team and come trade with me. You get all the alerts, all the live trading, all the algos, everything we offer. As always, all the links to join are in the description, and I'll see you when that market bell rings. Let's go to war.
Warriors, and we can share the same pot. I woke up and went to war in my tank top. Thanks, Pops, he an analyst, a veteran, and we ain't hating on them other dudes we better than.